We are live. All right. So, welcome everyone to this edition of the Industrial Real Estate Podcast. I am filling in for Chad Griffiths today. My name is Raphael Collazo. I'm a buddy of his and also the host of the Commercial Real Estate Academy podcast. Really honored to be here to speak with Whitney, who is just going to give us a wealth of knowledge pertaining to the self-storage industry. It's one industry that our brokerage has had experience with, and it's one that I think that is going to be a big, an asset property type, I should say, that is going to be worthwhile looking into going forward as well. So, Whitney, welcome to the podcast. And what we wanted to do is maybe tell us a little bit about yourself, tell us a little about your background, and what got you into the space.
Yeah, definitely. Well, thank you so much for having me. My name is Whitney Hutton. I am the Director of Investor Education here at PassiveInvesting.com. We're a private equity group that does multifamily, self-storage, car washes, hotels, and also real estate debt. My course of how I got into the space, I am not the type of person that went to school for any sort of finance degree, real estate degree, or anything like that. I actually fell into real estate in 2002 completely by accident. I was an accidental landlord. I purchased a house with a significant other. About a month later, that relationship fell apart. And here I had a house, all the bills in my name. And honestly, I was pretty kind of scared of what might happen. I stuffed it full of roommates and had to complete a rehab on the house. Keep in mind, YouTube was not around back then. And so I checked out the Home Depot 1, 2, 3 book, did a lot of things that I don't like about rehabbing and things I probably should not have done, like plumbing, but found out I hate drywalling. But anyways, got rehabbed this house, sold it, for a $52,000 profit about 11 months later. And then at that point in time, it clicked that I hadn't been paying anything, none of the bills, none of the utilities on this property. If anything, I've been putting money in my pocket. I'm like, how many more of these deals could I possibly do? This is amazing. Did several more deals on my own and then also with my husband. And then we decided that, if we want to unlock our golden handcuffs and actually create financial freedom and cash flow with these properties, we needed to hold on to them. So we scaled a single family rental portfolio. And then we decided that we wanted to be able to utilize that income and step away from our job, which meant we needed to scale quicker, go further, faster. That's when we transitioned into commercial real estate, both actively and passively. We started off with multifamily and then eventually transitioned into passive real estate investments in self-storage and car washes. I've also worked in the private equity space for several years, and that also has invested in self-storage deals. So I'm happy to talk about any or all of it.
Yeah, no, that's awesome. And you kind of alluded to your initial journey within the investing space. I feel like a lot of people, especially when they first start in the residential side. My first deal was in a fourplex, actually, a house hacked, a fourplex with my girlfriend, now fiance, and that's just kind of what got us into the space as well. And it's obviously for a variety of reasons. It's accessible. You can start off, early on and then kind of scale from there. But what, as the name suggests, the podcast, it is the industrial real estate podcast, and self-storage is one of those, property types that kind of falls in line with that type of assets. So I guess one of my questions is related to what were some of the early struggles when you decided that maybe the self-storage space was something you wanted to pursue. You mentioned something related to first getting into it passively, but if you could mention also maybe your foray into maybe the active side and what some of the struggles you faced on that front.
Yeah. So, when we first got into it passively, we were looking at how could we diversify our portfolio within real estate, right? Before that we had been, stocks, bonds, mutual fund investors, and, everybody says diversify, diversify, diversify. And so we were really looking at to how can we take advantage in uncorrelated spaces within real estate, to build a portfolio that could kind of bob and weave with the market, right? Like if multifamily is up, self-storage is flat, fantastic. Pandemic comes along, multifamily takes some hiccups, maybe on economic occupancy, but now self-storage is up for a variety of reasons with people transitioning, condensing households, or just needing a place to put all their extra stuff because they're downsizing. We wanted to be able to take advantage of those different, kind of factors with tenant behavior. Now we started off passively, and so invested in over 1,000 deals passively. And really, for me, I'm all about how can I get paid for my education. So that passive deal wasn't just all about diversification, but it was about like how can I like actually understand how the operator source the property, why are they in the markets they are, why are they choosing the business plan that they're putting on the deal, how are they operating the deal. Why is this appealing to not only investors, but also to the tenants? So I could really learn about the industry. And from there, I continued to invest passively in a few more assets. And then moving into the commercial space, that private equity space, my role was the director of operations and investor relations. And so while I wasn't actually going out and sourcing the deal, I had to actually partner with the operator, fully understand the deal, and be able to talk to investors about it, as far as like, why is self-storage a good asset class to complement your portfolio? How does, what are the, capital preservation, cash flow, appreciation, and tax benefits associated with the deal? How does it help align, with an investor's perceived goals that they need in their portfolio? And then also just talk about, the deal specific itself. Why are we buying? Where are we buying? Why are we buying the type of assets we're buying? Why are we structuring the deal either through single asset entities or through a fund? And so, or even like in this case now, we're putting them in smaller portfolios to take advantage of the interest rate environment. So there's a few different things, there that I think investors need to consider. And most investors, they just go, oh, I want self-storage in my portfolio. I heard it was recession resilient. Is the darling child right now because we're going through market consolidation. Still, you're seeing all these properties being picked up from smaller mom and pop operators. Branding's being put on top of them. We're seeing large exits to REITs like we saw last year. So just really learning to kind of like take all those puzzle pieces and help put it together for an investor.
Absolutely. Yeah. And you kind of alluded to some of the reasons why a lot of people are attracted to the space to begin with. And, if you could highlight maybe the top 3 reasons why, you think that self-storage is a property type that you believe in. And I guess if you could elaborate on some of those, I think that'd be helpful for the audience as well.
Yeah, I'll go over several reasons. Not you can keep track 1, 2, 3.
Mhm.
So for one, there is market consolidation still happening in the space. I mean, 2010, 11, 12. We're starting to see, there wasn't third-party management or quality third-party management to be able to, and so therefore, like the REITs, the insurance companies, and the banks weren't interested in picking up these properties. So it was ripe for retail operators to start snatching these up and putting them together in a portfolio, rebranding them, creating operational efficiencies, and then potentially seeing large exits of a portfolio to these larger buyers. Now we have more third-party management. Okay, that problem is being solved, but still there's tons of consolidation still left to happen. I mean, I think the last estimate I saw, we're probably not quite halfway through this consolidation effort. So we're light years behind the multifamily space. So there's still a ripe opportunity there. It's also a very recession resilient asset class. We saw it perform very well in 2008, 2009. We also saw it perform very well through the pandemic, partly because of tenant behavior. You can, hold rents or even do like a 10% or 15% increase. And for most people, that's like $5, $10, $15. They're not going to go rent a U-Haul, pack up their stuff and move to another facility. They're also not going to come in and get rid of all their belongings, right? There's a reason why they have that particular unit. Now, so that's a great opportunity to capture small incremental increases. And when you do that, you add all that income to the net operating, or increase the net operating income, add it to the bottom line. In commercial real estate, it's very NOI driven. That's what drives the value on the property. It's also right for operational expenditures, optimizing there, right? You're buying a garage, 4 metal walls, concrete floor. Now, for somebody who's looking for huge tax benefits or year 1 tax write-offs, that might be a challenge, depending on what's happening on the business plan on the property. Is there an expansion happening or additional building? But, if you're just buying, say 500 units and taking that over and not putting any real capital expenditure in there, you're getting modest tax benefits, which is fantastic. But you're also you're not taking on large operational expenditures on the project and large capex expenses. And it's like I said, for somebody who doesn't like tennis toilets and trash, this could be, or all those things that, interpersonal relationships that come in with, managing tenants on a property, and, AC's going out at like 4 in the morning or whatever. I mean, gosh, right now we're recording this. We're in the middle of a heat wave across the United States. This can be a very unique asset class. And I'll add one last point. We can also adjust with the inflationary market right now. You can adjust the rents on, generally for most properties on a 30-day basis. So as we continue to see cost increases across the board, on various consumer goods, we can continue to adjust rents on, self-storage properties.
Absolutely. Yeah. And you kind of alluded to it early on is the history of self-storage and how it really evolved over time. From my understanding, it's a relatively new concept. It's within the last 50 or 60 years. In the 70s, coming into the 80s, people started repurposing these industrial properties to be able to house, these people's storage. And just, with increased demand for product, people started storing more and demanding more storage, and that eventually led to the growth of the self-storage industry, which somewhat led to, the mom and pop aspect that you had described. And with consolidation comes larger interest from larger, entities that want to buy these assets. And a lot of those individuals in particular, if you can package them in a way that is a lot more attractive, they're willing to pay a premium for those types of products. And obviously that's, what you guys have been capitalizing on. And a lot of times when I hear people talk about the self-storage business, a lot of them allude to the fact that the turnover is a lot easier than in a retail setting, an office setting, even multifamily setting, where it's like, if someone doesn't pay or someone moves out, it's literally just get a leaf blower, blow it out, do what you need to do. And then you can essentially turn over the space. Whereas if you're talking about an office tenant who signed a 5 or 10-year lease, there's a significant amount of tenant improvement allowance that needs to be allocated to turn over that space. And then obviously the laws that you had described, I know with multifamily, we're starting to see a shift from, and depending on the state you're in, here in Kentucky, we're pretty tenant landlord friendly, but there's other states around the country that are not so. And so that obviously drives, how the interaction between the tenant and the landlord occurs. And I would imagine self-storage is one of those property types that, the dynamic is a lot different because you're not dealing with someone's physical residence as opposed to, the storage side.
Right. Yeah. They're not physically, hopefully, not physically living on the property.
You never know, right? No.
I got some funny stories. We don't have to share them here. But my uncle and aunt own a self-storage facility where they live, and they inherited it actually. And I've heard they also inherited a liquor store and a gas station. And long story short, there has been some hysterical stuff that have come out of there.
Well, even with some of these mom and pop self-storage facilities, like you had mentioned, I mean, we've looked at different opportunities for clients of ours in the past, and the idea, the payment collection, like we're just like putting an envelope under the door like that. We've looked at properties, and we're just like, we can't account for the income and what the expenses are because the documentation is terrible. And, it's like handshake agreements with a lot of people when it comes to some of these properties. And so it kind of alludes to the fact of your mom and pop aspect, although some are much more organized, especially when you start scaling to those sizes. I'm sure a lot more organized, but that is something that is still happening in the market today. So.
Yeah, I think one of the aside from the raising the rents on the property, one of the more attractive operational expenditures that you could probably achieve is a lot of these properties, mom and pop, they have one full-time, maybe 2 full-time people on them, and you're paying somebody $40,000, $50,000, $60,000 a year, maybe inclusive of benefits, to maybe lease 1 or 2 units a day. A lot of that can be like, with the technology these days, can be done all online, consolidated at like a, regional call center, something like that. Now, there's a balance to strike. Like you still need somebody visiting the properties, making sure the maintenance is taken care of, CapEx is being taken care of. But now you can, create greater efficiencies on multiple properties within one area. So we're really looking to do that at least with the portfolio that we're picking up.
Absolutely. That's great advice. So one of the things that, I'm sure a lot of people are curious about is maybe they're interested in pursuing self-storage opportunities. What are some of the things that you guys look for when you're looking at these types of properties? I know you alluded to a few earlier, but if you could elaborate a little bit on that, I think that'd be helpful.
Yeah, definitely. And so we have two managing partners, Chris Bennett and John Allen, that run, specifically the self-storage side of the business. And so, they are the gurus when it comes to like all of our acquisition criteria and underwriting. If I can like try to step in their shoes for a moment, really one of the things, it's we need to be in a high traffic location, right? It's much like multifamily. You have to have people, location, 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 and also it has to be easy for people to access. We also look for the look at the competition around the area. Making sure that we don't have like inter competition and intra competition within ourselves. So we make sure that we're spaced out at least 2 or 3 miles, and in a radius from any other property. We're also looking for, the household income to be high. Like if the household income could not afford to pay extra for self-storage, not a good place to be. So one of the things I know, Chris and John, I've heard them multiple times, like they'll be just, kind of driving for dollars, and they'll just go sit on a property that they're looking at, putting an offer on, and they'll sit there and count cars. They're really looking for, what kind of businesses are in the area, what kind of competitions in the area, what kind of traffic count is going by. They verify all those numbers themselves. We also get that from professional research. And we're also looking for is that market expanding or contracting or plateaued? That's, we always try to be in the path of progress with all of our properties. We're looking to, kind of stack all those investing cards in our favor, not so much be in the tertiary market where will it grow, will it not grow? We don't know. We're really, wanting to make sure that we're, stacking all those cards as much as we can in our favor.
Absolutely. Yeah, no, and population really drives demand for storage
Mhm.
as well. So you'd alluded to it as like population growth is probably one of the key factors that you guys look for, and it's similar in the multifamily space. I
Yeah.
mean, it's similar in all type of economic environments that require retail. That's something we look at a lot in the retail side is what is the economic, what is the population growth in this area, obviously demographics, and how much are people making. I mean, that's the type
Mhm.
of analysis that you guys do, I'm sure, and it's why you've been able to acquire these properties that are ultimately going to be able to achieve the top returns for your investors. Now, one thing that I wanted to ask is related to let's say you find an opportunity, it kind of checks some of the boxes as it pertains to what you guys are looking for in an investment, and you decide to put this property under contract. You've come to terms with the ultimate seller, and now you have to go through the process of performing due diligence on these opportunities. Can you kind of highlight on some of the things that you guys look out for as you go through the process?
Yeah, we're looking to confirm all the numbers that the seller has provided us. In this space, much like in multifamily space, it's the net operating income. So, what's the income coming in on the property? Can we verify that for the last trailing 12 months? Longer if we can get a hold of the financials, but more than likely, it's just the last trailing 12. We're looking to verify the expenses. One of our biggest expenses is going to be taxes. We're looking to verify not only the current taxes being paid, but any projected tax adjustments that are going to be happening in the next 1 to 5 years, during a whole time, incorporate those in. We're looking to take a look at the operational expenditures on the property, especially like in the full-time employee category, and contracts category. Renegotiate any contracts we can. Also, if we can reduce the overhead of the property in any sort of way, and kind of roll those operational efficiencies up to our call center or to our regional employees, we'll do that as well. But we take a very conservative approach when it comes to increasing income, as well as conservative approach to estimating the vacancy on the property. You don't want to be 100% occupied on self-storage. You definitely want to have like a few units open for the person that's going to walk in the front door and is like, I need a unit today, and I don't care how much it costs, right? That's a great position to be in. If you're 100% occupied, it probably indicates that you're not charging enough. Self-storage is also tends to be a little bit seasonal in a lot of locations as well. But really, so we're taking great care to verify everything that's coming in from the seller. If it's a newer build, is there any concessions that need to be burned off in the next few years? What does that look like? And then verify all of our potential expenses going forward so we can make a very conservative projection.
Oh, that's awesome. Yeah, and you alluded to concessions. Is that related to, offering people sign-on bonuses if they sign a year
Free
lease or
30
whatever?
days. Yeah. Run by the end of the month, you get your first month free, right? Those type of things.
Mhm.
Because yeah, that you have to burn off over time in order to just be able to realize that income.
Absolutely. No, no, those are some great points for sure. So in situations, and this is something that I'm kind of curious about, when if you look at a property and maybe you have the property, but you also have some land on the side that has potential as far as value add is concerned by developing additional storage units if the demand allows for it in that
Mhm.
particular area. I guess what are some of the thought processes and maybe checklist items that you guys look for to see whether or not A, it's worthwhile to pursue, and then B, do you already have a team in place to kind of execute on that business plan if you decide that's where you guys want to go?
For the expansion piece, I mean,
Hmm.
it's always intriguing to buy the land, whether you actually did the expansion or not, because that leaves skin on the bone for the next buyer,
Hmm.
right? There's always an opportunity there to be able to hand that off to the next buyer and be like, hey, we didn't do everything, and you can still like be able, to add additional income to the property. And so we do like properties like that. And for us, it's the underlying fundamentals of what is currently already on the property that needs to be able to cash flow from day one. We're not developers of self
Hmm.
storage. We like deals that are already working and already performing that have development opportunities. And so, being able to put up another 50 or 100 units is a fantastic opportunity. But if it doesn't work, it doesn't work. But we'll certainly hold on to the land and pass that on as a future benefit to another buyer. As far as do we have construction? One of our managing partners, that's his whole background is in construction, and so he's definitely very well versed and works very closely with our managing partners in the self storage space to be able to bring in the right people to manage that construction. So it's something that we have done on several of our properties. Um, and so we have an in-house team ready to go? No, we generally contract that out.
Yeah. And that's completely fine. I would say, because with the construction industry comes a variety of different other things that you have to factor in, especially if you have in-house staff. I know I have several friends of mine whose families own construction companies, and the overhead of maintaining, all the staff that you need to is definitely something to consider. And if your focus area is, identifying and putting these deals together, it may not even behoove you to look into the construction side. As they say, specialization is the key to success in industry. So
Yeah, I would say our specialization is being able to acquire the property and manage the asset.
yeah.
And so and hire the right people to get the work done. It's kind of more of a who, not how.
Yeah, that's, by the way, that's a phenomenal book. I read it last year, and game changing book if you guys haven't read it yet. So
Mhm.
so obviously you handle, a lot of the investor relations side. So you interact with, people who are interested in potentially investing in these types of opportunities. I guess as far as recommendations are concerned, let's say that, there's someone out there that's wanting to look into these different opportunities, yet they just don't know, how to properly vet a sponsor. What are some of the things that you typically recommend people do to make sure that they're, checking the right boxes before they start moving forward in any type of opportunity?
Yeah. And like just a, point of correction, we have an investor relations team. Andrew Davis is our
Hmm.
director of investor relations. I work very closely with him as the director of investor education. And so we blur a lot of lines between the two
Hmm.
of us, but just want to make sure that we're giving
Sure. No,
proper
of course,
shout
of
out
course. Hmm.
to him and his team. But as far as, a lot of the same questions that you would ask to vet a multifamily deal still apply, right? You still want to make sure that you're with an operator that you know, love, and trust. Somebody that you've been you've talked to them on the phone, you understand who they are, what is their investment philosophy, what is their background. Even more specifically, you want to talk to them about like how many self-storage deals have you done? How many have gone full cycle? What do the exits look like? What does the performance look like? You want to understand the team and how is it put together. There are a lot of people that are operators that are trying to do everything all at once. Maybe there's 1, 2, 3 managing partners, and they're trying to invest in all the assets themselves. And we have not structured our company that way. We brought, Dan, Danny, and Brandon, our 3 managing partners, our founders. they look for the experts in that space and to bring them into their world. And so that's, how we have Chris and John, the managing partners of the space. They handle self-storage. There's no overlap between them and multifamily. And so that's really a true equity company whenever you're getting that level of expertise brought in. So maybe digging into like, how is the internal structure of the company put together, and then how are they scaling that? Who's managing the properties? You want to make sure that there's a high quality management team that is overseeing day-to-day operations, and then who's doing the asset management on the properties? Who is the person at the company level, the private equity group level, that is overseeing the day-to-day operator? And so those are just a few questions. We actually have a webinar that we do weekly. It's called Self-Storage Investor Nation, for people who just want to learn more about the space. Certainly I think it's more geared towards active investors, but certainly for those passive investors that are just like, oh, I'm not quite sure, like, how does this all put together? That's a great opportunity for them.
Oh, absolutely. And the education piece, like you said, is the starting point for any journey. I'm sure before you got into the investing space, it was partly, well, in your case, you just kind of got into it and learned as you went, but that's part of it as well. It's the education piece. As you continue to learn and expand your knowledge, you feel more comfortable with pursuing these types of opportunities. So I appreciate that you shared.
Yeah, and I think the question was how does one vet the operator? But really, there's two questions before that. Is, what are your goals? What are your investing goals as a limited partner, as the passive investor? What are your goals? What do you need from your portfolio? Do you need capital preservation? Do you need cash flow? Do you need equity? What kind of business plan risk are you willing to take on to get the equity? What kind of tax benefits do you need? I've had people come to me that are like, I need 90% year one deductions and I want to be in self-storage. And I'm like, and they would say, no risk. And I'm like, that deal does not exist. So being realistic on how that particular asset class can help you achieve some or all of those goals. And then tangent, we've already touched on that. What is your business plan risk? What kind of risk are you willing to take in order to achieve those goals? And once you fully understand that yourself as a passive investor, now you can start filtering out all the different operators and their business strategies, maybe even markets, and definitely the deals based on that.
Definitely. Great insights. Really. I appreciate you sharing that. So one of the things that, you kind of alluded to earlier was related to, obviously the education piece, but also maybe if you could share some of the best resources out there that you recommend. And obviously, I would highly recommend you guys to follow, what they're doing on a regular basis as well. But if you would share some additional insights, that would be also great.
Yeah, as far as resources, I really like, obviously, the partial, our self-storage investor nation. I mean, really, Chris, John, our three managing partners, Dan, Danny, and Brandon, they really pour their hearts into just, any question that, an investor or an active investor is posed. They really just try to put together, package that information up really well on a weekly basis. We also have, I think next year we're only going to do one large self-storage investor nation conference, but we've done a couple virtual conferences throughout the year. That's an amazing wealth of knowledge. Not only do you get to hear from passiveinvesting.com team, you also get to hear from other leaders in the industry. So that's amazing as well. Then just being part of the market reports. I really love CBRE. They have like, a very kind of tight like self-storage place. For me, I'm pretty partial. That's where I go.
That's awesome. No, and as far as books, do you have any books that you'd like to recommend? I know that, the audiences, they're all voracious readers, so I'm sure that they value some insights on that front.
I will tell you my favorite book that I've been reading lately. It's not self-storage specific, but it's it's right here.
Mm-hmm. Nice.
Behind the camera.
Oh, sure.
Psychology of Money. This is
nice. Yeah.
Yeah, Morgan Housel. That's like one of my favorite books right now, because it just even having been, in the investing space since 2002, I've picked up this book and you're just like, oh, wow. Like you don't realize how much of investing is behavior driven. And we like to all think that we are making very objective decisions based on numbers and market reports. And offering memorandums that are coming out, and really at the end of the day, to have somebody just shine a mirror right back at you and be like, you're not as objective as you think you are. It really just kind of opens your eyes. You're just like, oh wow, okay. These are the behaviors, and some of those behaviors you inherited from your family. So it's really, I don't know. I'm kind of going down this rabbit hole lately. I was just trying to figure out, I'm in my 40s. I'm trying to figure out, like, what did I actually pick up from my parents and my family growing up?
Oh, absolutely. Absolutely. And these types of books, the mind expansion books, are just, phenomenally insightful. And, I obviously read books on real estate, but I feel like the most insightful books I've ever read were not real estate related. They're completely unrelated, primarily mindset driven books, and that shifted and created a shift in the way that I approach my day to day. One being the who not how. I always recommend to people that kind of shifted me away from doing tasks that I probably shouldn't be doing, and focusing really on the things that are my highest and best use. And that's another good book as well. So
absolutely. And to drop one more book on people, I mean, this is one that I've heard many times in the space, and that's The One Thing. That, for anybody that's struggling, especially, I know a lot of investors that I speak with, they're like, I like multifamily, I like car washes, I like self-storage. Which one first? And I'm like, that is the question. Which one first? In that book, it's not just about like investing, but like just how can you prioritize your goals and know that eventually you can check off the entire list. And if you focus, it really won't take that long.
great advice. Really, really. All right. So I wanted to give us some time to be able to answer any of your guys' questions if you guys are watching this live. So we'll go ahead and open it up to Q&A. So feel free to type away. Let's see. I think we may have a question. All right. So warehouse investor. Hey, man. Hey, how's it going? They say, can older warehouse property be converted into self-storage?
Yeah, I would say so. I mean, this is not my area of expertise. My area of expertise is dealing with the investor, but I have seen old industrial units be converted. I've seen old warehouses, in like a central business district area, CBD area of a metropolitan service area. I've seen old Kmart's be converted to self-storage. And even like in those shopping center Kmart's, I mean, that's not something what we specialize in. We like our units to be, standalone, because you've got tenant contracts that you're dealing with a landlord. We like owning the actual property, but I've seen those Kmart's be very successful, because now you can put security cameras and they're all automated. It's amazing. Yeah, you can pretty much turn any area into self-storage. I feel like just because you can doesn't mean you should. So, kind of like rewind and go back and like listen to those metrics that Raphael and I kind of dropped earlier.
Yeah, I couldn't agree more. And that, like you said, you got to still look at the viability of the site itself. But that's actually, from my understanding, how self-storage started. It was, converting these industrial uses into storage facilities. I mean, it was something that evolved over time. So it definitely seems like it could be a viable option. So warehouse investor asked again. So also, can you get an increase in rent by having heated storage, or are customers not willing to pay more for that? So temperature control.
Yeah, definitely. Yeah, I think, temperature controlled, if you're in the South, humidity controlled, environments. I, dealt with, settling my mom's estate years ago. There was a self-storage unit involved, and she did not want to pay extra. And a lot of the stuff in there melted because it was not in a temperature controlled environment. So we lost a lot of family heirlooms that way.
I'm sorry to hear that.
Yeah. Well, I mean,
yeah,
that case in point, like,
Oh, yeah.
people can and should pay for that. So,
Yeah.
that falls to the tenant not knowing what they need.
Yeah, and I will say this, here in Kentucky, we have a lot of lakes around, and so boat storage is very popular, and you could choose to get the, covered boat storage, non-covered boat storage. There's winterized. They winterize your boats, and you can put it in a temperature controlled environment. It's just dependent on what you want, and depending on what it is, there's like a tier. Like they have different tiers of what it costs to, store these types of things. So
yeah, a friend of mine actually has a boat and trailer storage in Missoula, Montana, and
oh, nice.
It always blows my mind. He like offers, there's a certain part of the lot that he actually like plows snow, and people will pay extra to that. And I'm like, who's getting their boat and RV out in the wintertime? Anyways, people pay extra for it. So
Yeah. Well, there's someone out there that wants something, right?
yeah.
Yeah, that's awesome. So Ron, hey Ron, how's it going? He said, what type of exits do you see for owning self-storage in declining population towns?
Ooh, that's tough. I mean, I think that goes back to the investor fundamentals. I mean, one of the key things about any sort of commercial real estate business related is that you need to have that fundamental of population growth. Um, if you're in that position, I would make sure to get in touch with a qualified broker to have them help you think through of like straight up sale, maybe like a lease to own or solar financing option, and just know, I would imagine if your population's declining, the net operating income on that property will now start declining, which means the value will start declining. And so making an exit sooner rather than later is probably in your best interest.
Yeah, no, that's some great advice. And this is something that we deal with a lot. I'm in the brokerage side here in Louisville, and there's certain times where you're working with a client who their asset or their property is in an area that maybe is deteriorating, or the property's condition has just not been up to what it needs to be. And you kind of have to say, look, if you want to sell this in this timeline and you want to maximize what you can get for it, you need to kind of be realistic about what your current situation is. And it may very well be better to sell and then reallocate those funds in something else that could perform at a higher level. So,
yeah, I think there's one other opportunity here is like, could it be repurposed into a higher and better use? The concerning thing there for me is the declining population. That's going to impact any business.
Absolutely. Absolutely. So yeah, Ron said, definitely a factor. I thought demand was more from household movement, regardless of move in versus move out.
There's a report. U-Haul puts out a report every year to let you know where populations are moving to. So that's a very interesting report. I know a lot of operators actually follow that report.
Oh, I'm sure. Yeah, I went to school in Arizona and Phoenix, and that's one of the faster growing places in the country. And so I've followed some of the trends over there, and I've been back since I left in 2014. And it's just night and day. It's unbelievable what can happen when there's an influx of people that come in that demand different properties.
When Southern California exit LA.
Well, I was reading, it was a while back. I think it may have been during the pandemic, where it was like U-Hauls leaving California were like 4 times more expensive than those going to it, or something like that at the time. So it's unfortunate, but it was a reality. So, all right. So it looks like we are done with the questions. That's awesome. Well, Whitney, we greatly appreciate your time. I learned a lot from our discussion, so I greatly appreciate you sharing your insights with the podcast today. If people wanted to learn more about what you do, maybe get in contact with you, or just be able to have a conversation, what's the best way to be able to do that?
Yeah, I'll give you 2 ways. You can email me directly at whitney@passiveinvesting.com. If you're a passive investor, I encourage you to go to passiveinvestingwithwhitney.com. There's a quick little form there you can fill out you get access to my calendar, and we can hop on a call, and I love talking all things real estate, and we can figure out what is the best option for you.
That's awesome. Yeah. And I'm sure if people were wanting to talk to you about obviously the different types of properties, and maybe getting an idea of what they're, kind of walking through their investor profile, I'm sure that would be something you could help them with as well.
Yeah, I love talking to investors about their goals and their business risk. That's really where I start the conversation. Even seasoned investors, just double checking that alignment, and then offering up what opportunities could be a good fit for their portfolio.
That's awesome. Great advice. And we'll go ahead and include all that information below as well. So if you guys are watching this on YouTube, feel free to go in the description. It will be available shortly. And then if you guys are listening to this in a podcast format, whether Spotify, Apple Podcasts, whatever, feel free to go in the description as well. And then don't forget to give us a like, a subscribe. If you guys are watching this on YouTube, if you guys are listening to this in an Apple Podcast format or Spotify, feel free to leave us a 5-star review. We would greatly appreciate it. Again, thank you all so much for watching.